Good afternoon, guys. As I promised you yesterday, today's video will be about my trading plan. Guys, as you know, in the era of this computerization and this time to time updation of the prices, there are almost thousands and thousands of indicators available now. What is the purpose of all these indicators? The purpose of all these indicators is to allow you to judge what the market is going to do next. Isn't it? But I tell you frankly, guys, you don't need to know what market is going to do next to make money. This is the very basic fundamental truth which you have to believe and which have to inculcate into your mind, into your brains, make it a habit that you don't need to know what market is going to do next to make money. You might think what a mad full of statement this is, but I tell you guys, I really tell you, this is not just what I say. This is the statement of Mr. Mark Douglas, the writer of Trading in Zone. And guys, before May 23, I too didn't believe in this. But really, this is a statement which can change your life. The only thing is you have to make it as your belief. You have to develop it as your belief. And developing anything which you don't believe or trusting something which you don't believe, it's very hard. Okay, you'll come to know about this. This was just an introduction. Okay, guys, what is my trading plan? In my second video, as you have seen, you might have heard that I use only camera level points, camera level indicators. But guys, frankly, from Thursday, I have decided that I will use no indicators. I will use the plain raw chart. Actually, what is the job of a trader? A job of a trader is to identify an opportunity in the market, execute that opportunity. If it works as you say, stay in the market till you reach your profit target. If it doesn't work, decide a level beforehand where you will exit your trade when this trade doesn't work. This is actually the work of a trader. And doing it consistently, day after day, what will it do? It will add the stacks in your favor. Okay, guys. My trading plan. I don't need to have a chart. I don't need to have to tell you in the drawings, nothing. You can really understand it by just hearing. It's as easy as that. Look, there are only two types of trades. First trade is a breakout trade. Second trade is a reversal trade. When the market is sideways, people do option selling and get the advantage of theta degree. This is not our strategy. We are option buyers. What we are planning to do? What is our goal? Our goal is to convert 15,000 capital to 30,000 capital. Can you sell option in 15,000? No, right? So guys, what is my strategy? First of all, I allow first 15 minutes candle to form. I mark the high and the low of the first 15 minutes candle. Why I don't enter into first 15 minutes candle? Guys, it's not that I have learned this from first day of my trading. I have learned it after losing a lot of money in this. You don't need to enter into the first 15 minutes candle, because first 15 minutes candle is completely governed by amateurs. Professionals don't enter into first 15 minutes candle. We have to let all the heat settle. Let it get cool. ठंडा करके खाओ. Okay. The first 15 minutes candle is formed. After the first 15 minutes candle is formed, what you do is mark high and low of the first 15 minutes candle. Now wait for second 15 minutes candle to form. Only 3 scenarios will happen. Only 3 scenarios. First, the second 15 minutes candle will close between the high and the low of first 15 minutes candle without even touching the high and low of first 15 minutes candle. Got it? That is the first 15 minutes candle. Second 15 minutes candle formed is an inside candle. The second scenario which will happen is the price after the first 15 minutes candle, second candle will move out of range either on the upside or on the downside of the first 15 minutes candle and pull back to close within the first 15 minutes range. What does this mean? This means that the second 15 minutes candle had tried to break out of range, but it failed. And the third scenario is the second 15 minutes candle breaks out of the high or low of the first 15 minutes candle range and closes out of the range. So at 9:45 you have 3 scenarios. The first scenario is the second candle closing within the range or forming an inside candle. So what do you think we have to do? Perfectly right. We have to do nothing. We have to wait. Until when? Until any of the 15 minutes candle breaks out of the range or closes out of the range. In this range, we don't take the false breakout trades. Means what? We don't take the trades where any candle fails to break out of the range, that is moves out of the range and closes within the range. We don't take these kinds of range after the second candle. Okay. How will I call this trade, that is the inside candle trade, as a T1 trade? Okay. When T1 scenario occurs, what is our job? Our job is to wait for any 15 minutes candle to close out of the range of the first 15 minutes candle. The day when these kinds of breakouts don't happen, whole day the price moves within the range itself. Why should we trade then? There is no trade, absolutely no trade on those guys. Before 12:15, if this breakout happens, then and then only we take a breakout trade. We don't trust breakout after 12:15. This is my first strategy. Now what if the candle breaks out of the range before 12:15? Now when the candle, any 15 minutes candle closes out of the range before 12:15, we take a breakout trade. If it breaks the high of the first 15 minutes candle and closes above, we buy CE, strike price just inside. just in the money. If it closes on the downside, we buy put with just in the money strike. Okay. Where will our trade end? After any candle forming a breakout, if any 15 minutes candle closes within the range, that is closes within the first 15 minutes candle range, our trade ends. This is our stop loss. In case of T1 trade, this is the end of the day. Got it? What is a T1 trade? First 15 minutes candle high low, second candle closes within the range without touching the high or low. Allow any candle before 12:15 to break out of the range of first 15 minutes candle. If breaks the high, buy CE. If breaks the low, buy PE. If any candle closes within the range after breakout, your trade ends, your stop loss is set, the day is over. If any candle doesn't close within the range, you exit your trade at 3:15. You take whatever market gives you. Believe me guys, after so many days of backtesting, I have seen that if any candle closes within the range again, your stop loss is not more than 50 points. Maybe 55 to 60 points, not more than that. In many cases, your stop loss is 10 points, 15 points, 20 points. But when you exit at 3:15, you at least make 100, 200, 300, 400, indefinite points. Maximum I have made 400 points in a day. I didn't keep it, that is the other issue. I'll come to that in future videos for the videos. How to keep it, I've learned that now. Okay. So this is my first trading strategy. When T1, this is a T1 trade. T2 trade is when the second candle moves out of the range of first 15 minutes candle, and instead of closing out of range or instead of making a breakout, it fails to break out and closes within the 15 minutes range again. We will come to this T2 trade after you see the details of T3 trade. Okay. What is a T3 trade? T3 trade is the second candle closes out of the range of first 15 minutes candle. Second candle closes out of the range of first 15 minutes candle. What does this mean? This means that the breakout has happened. You have a breakout now. If the second 15 minutes candle has broken out of the 15 minutes candle range, you buy CE with just in the money strike. If the low is broken, say by the second 15 minutes candle, you buy PE. That's all, as easy as that. It's very easy, as easy as that. Okay. Now you are in the trade, you take a breakout trade. Now when you let trade fail, if before 11:15, if any of the candle closes within the range, of first 15 minutes candle, you hit a stop loss. Your first trade is over. You take a loss, you accept a loss. After that, what to do? Now the 15 minutes candle has done its work. The breakout in 15 minutes range has failed. Now come to 1 hour chart. 9:15 to 10:15, mark the high and low. 10:15 to 11:15, see whether it's T1 trade in 1 hour candle, T2 trade in 1 hour candle, or T3 trade in 1 hour candle. Got it? The purpose of your second trade is only try to recover your loss of the first trade. That's all. Don't expect much from the second trade. In some days it gives you. I'll also tell you how to trail the stop loss and all, but this video will become a bit lengthy, so I'm not interested in covering all these points in this video. If you're trading with me, I'm telling you my daily trades, you will come to know about this. Okay, got it? T1 trade, T3 trade. T1 trade and T3 trade are similar trades. Both are breakout trades. In only the differences in T1 trade, if the first trade before 12:15 breakouts, if any candle before 12:15 breakouts and that stop loss hits, you close your day. In T3 trade, the second candle closes out of the range, you take a breakout trade. If the stop loss hits, you take a second trade on the basis of 2 1-hour candles. In that also T1, T2 and T3. Okay. Next is T2 trade. T2 trade. What is T2 trade? T2 trade is the candle has tried to break out of the range, but it failed to break out and closed within the range. What do you think, guys, that is? When the breakout has failed, it means that reversal may happen. Guys, enter. If the higher side fails to break out, enter PE at that point. What is your stop loss? The new high formed. If the low side fails to break out, enter CE. What is the stop loss? The new low formed. What will happen? If any candle again closes above the range after the breakout failure of the high, if any candle closes above the range, your stop loss is hit. But what? But a new breakout has happened, and there you can enter a breakout again. On the lower side, if any other candle, if after buying a CE, if any candle closes below the new low, exit from the CE and again buy PE. You have to reverse your positions. Guys, this is the very profitable scenario, I tell you. If we, if we develop a mastery on this scenario only, that is T2 scenario, you are going to make huge money, man, huge money. Thursday was the same thing. What was in my mind? 2 days it has fallen. How can this again break out? How can it? I didn't enter a reversal trade. Market moved low 400 points. I didn't take. What was my bias for that? My bias for that was, or what are the other parameters I used? The other parameters I used was camera levels. The market was moving below the lowest of the camera level, that is R5, and I thought from here it will reverse. That was my fault. So from Thursday I removed all the camera levels and I am trading the naked chart. Got it, guys? Got it? T1, T2, T3, only 3 scenarios. When T1 fails, day ends. When T3 fails, take a trade according to 1 hour candle, try to recover the loss. That's all. When T2 happens, you buy PE at the top. When it fails, you take a breakout trade after that. When when you buy CE at the lower end of the trade, and when any candle closes below the low, take a breakout trade. That's all, man. Just follow these 3 rules. Just follow these 3 rules. I guarantee you, me along with you, will change our lives. Really will change our lives. Thank you.